All right, so let's see if anyone can hear me. All right, so let's see. Trying to get a link going right now. All right, so welcome everyone. Can hear? Okay, good. Welcome everyone to the live stream. So we talked about this scenario yesterday in the yesterday Stock Talk. Actually, can you guys see anything? Or is this just a blank screen? Okay, let me... Can you all see anything? So, because right now I'm looking at this and it seems like no one can... I can't see the chart. Can see you and your chart. Perfect. Okay. So, yeah, welcome everyone. So this is one of the scenarios we talked about in which we can get a dip. So, it's a pretty wild day. This is the market itself. SPY intraday. Got some news on the Chinese tariffs. Got the Powell speech. And then all of a sudden we got a Trump tweet, or a couple of Trump tweets. Regardless, let's take a look at technical levels, right? Technical levels. All right, so let me take off these lines here. So we're coming in down towards the bottom end of the range, which is the 150 period moving average. We said yesterday that it would not be impossible for the markets to drop 3%, but remember, we're looking for... I'm on TVIX right now, yeah. So we're looking for support levels to hold. Now, should they break, and they can break, we probably either... It really depends. If the momentum is really high to the downside today, we might see it today. But given that it's a Friday, we might end up just very close to the 150 period moving average before... people are going to be guessing whether we're going to hit the 200 Monday or Tuesday, right? But we'll have to monitor this intraday. So similarly to the last time I went live, TVIX is one that was day tradable the last time we went live as well. So we talked about, this is TVIX intraday, and how riding the 20 period moving average, right? This is based off of complete fear of potential retaliatory tariffs by Trump this afternoon, so on and so forth. So here's the 20 period moving average, and that's pretty much it. I mean, this is again, a very linear pattern, similar to what we had in the past. Now, one should always keep in mind that, you know, even this market, even it's bullish, because I've had a bullish bias, right? It's not impossible to come down towards this area on the ES, which is where we are right now. So you can imagine we hit the 150. Why did we get a small bounce off of this area? Because we just hit the support level, right? But here's the deal, right? As we all know, we've hit it once and twice. So, you know, the big question is, are we really going to hold it the third time around? That's difficult to say, but we're still in this trading range, right? We've always talked about this trading range, holding the 150 period moving average, and you can see bulls had a reaction right at the 150 period moving average. They're trying. This is not a very stellar defense. Let me just say, this pattern here, again, it's not very convincing of an adequate defense by the bulls. Okay, usually we want to see it hit the price level and at the very least get towards the 50 on the intraday, but you can see we're still trying to hug the 20 period moving average. Still, there's some fear in the market, obviously a lot of fear in the markets. But okay, so we talked about it. First support level is right here, right now. Second support level, 200. And then we have a couple more support levels down here as well. So when we look at TVIX, you can see we broke the 20. Now we're impulsively breaking the 20, so one has to be careful about TVIX right now. Can we have a lift in the future? Obviously, yes, but you know, this is, you know, potentially a very good stop where we are right now. So I'll have to be monitoring this chart here. So looking at the indices, we can see that the transport's dipping the most. Now, we've talked about the transports and how in the past few days, we saw transports being really weak. Actually, I mentioned this to the members. Transports have been weak. Financials were stronger yesterday, but overall, it was a little bit weaker the past few days when compared to the rest of the indices. So here's financials stuck in the middle. So this won't give us a clear picture. IWM has been weak pretty much the entire time. NQ the past few days has been holding up quite nicely. This was the one that exhibited relative strength with the rest of the market. So how do we put all this in perspective? Well, the indices that have been performing poorly continue to be performing poorly right now. So you can see TVIX, once we break the 20, this is likely to continue on lower until we get that next spike of fear, right? But, you know, objectively speaking, 20 period moving average, hugging it, the stop could have been right here. So this is what we're seeing again. And this corresponds to the 150 period moving average, which has acted as a defense. You can see SPY back down in this area and acting as defense, but more accurately portrayed on the ES time frame. ES hit the 150 exactly, and now bouncing off of it. All right. So again, I expect these levels to hold, but we'll see if these levels can actually hold in the next few hours. As let me see if Trump has spoken. So let's take a look at the VIX. So here's the VIX, showing another spike. Your resistance levels are 23.4 and possibly your support 17.4. Obviously, this is a pretty wide range. But you can see the VIX moves very quickly. If there is, this spike of fear, the VIX does move very quickly to the upside. So while this is a big range, this can get up there quickly. So yeah, I just wanted to come on live and talk about expectations given this down move. I know there's a lot of fear in the markets, but we look at this objectively, and I like the ES chart. The futures chart traded a little bit better because it captures the overnight and pre-market sessions. So I like the ES chart a little bit more. So far, we're bouncing off of it. Am I convinced that this is the ultimate bounce back up? Not yet. Not yet. But we should not be surprised that we're bouncing off of this area. Here's Dow futures. We're coming back towards this area, 25837, around this vicinity. We've been trading in this vicinity for quite some time. Today, getting a rejection off of this area. So with the stocks itself, you know, we're not all in the red right now. So if you take a look at this, I believe Salesforce reported earnings, which is why it's up today. Oh, but pretty hefty sell-off with the markets as market conditions kind of deteriorate. So this is Salesforce. I'm just looking at one of the positive and one of the few. Not everyone's in the negative. Boeing's still positive as well. Roku tends to be the oddball sometimes. Roku, we've seen Roku do well in our group when markets have turned lower. So this is not a surprise necessarily. Roku has held up well. But then here's Salesforce. Your Salesforce supports 148.76 for those who are looking at Salesforce. Yeah, so here's TVIX, right? We're still, you know, I'm monitoring TVIX. Remember, the line in the sand for bears to convince me of something otherwise continues to be 27.25. If TVIX cannot exceed 27.25, we're going to say this is just the run-of-the-mill lower high that is to be expected. And until we can exceed this level, this is still on a downtrend despite a powerful move today by TVIX. Opinion on, hey Rizwan, opinion on crude oil. Yeah, certainly. So we've talked about crude oil on a daily time frame, and we said that crude oil was on a short-term downtrend, right? So this is the resistance line that comes across the lower high line. But at the same time, we can establish a higher low. So this is more of a wedge type pattern, and we expect this to break one way or the other. But this was on the upper end of the range, right? So being on the upper end of the range and getting that move lower is not too surprising, but we're getting to the bottom end of the range. If one wanted to draw a support line like this, such like the wedge, it's possible. You can do that as well, but I'm just leaving it down here near $52 is the support. So it's getting close to the support area. So yeah, my thinking is this for broad markets, right? Expectation in a bull market is that we'll hold one of these levels, right? Whether it is the 150 right here, the 200, and this level, 27.37, possibly a little bit lower than that, okay? But we're not going to talk about all the way down there just yet. By expectations, those levels will hold. However, I just have to say this, that, this looks like it's trying to hold this level right now. But my thinking is that we've already hit it twice, as we can see. And twice in a pretty close time period. And this is our third time hitting that level. As we push lower, okay, I expect these levels to be stronger, okay, not weaker. I told this to members as well. I expect these levels to be stronger. So once we hit to the 200, expect this level to hold stronger relative to the 150. This level to hold stronger relative to the 200, not weaker. So, especially down here as well. Because if you can imagine, bulls, if we make a lower low, right, bulls will defend and make another attempt at the all-time highs. This will not be the end. So it's not just going to be a washout move after a quick, if we get that down move. Checking up on TVIX. So there's a couple things you can be watching on TVIX right now, right? One is the 20 period moving average, which is your gauge of when to possibly enter and exit, okay? And the second is the 2050 cross. So when the 2050 intraday, this is intraday, crosses to the negative, then that's something to be cautious of. So you can see we're right now in the midst, and you can see this candle's trying to form. And if this gets above the cross, it will attempt to prevent the cross from occurring. So again, a pretty critical minute for broad markets and TVIX. So far, you see a rejection, but we'll see with 10 seconds to go. So you can see if we get that rejection, as we see right now, you can see the volume coming in a little bit higher. People see this as a rejection, and then hence, look at the cross. Here's your bearish cross, right? So now our expectation is even stronger that we get rejected at this intraday moving average. Space Ghost markets are going. All right, so yeah, markets. Yeah, this is what markets do. They ebb and flow up and down, and just recently we've had. It's just a more volatile state, right? It's just we have some catalysts out there. We obviously got a technical range we've been trading in, but you know, overall nothing too much has happened. So here's the SPY intraday chart for those who are curious. SPY intraday. We also need to keep an eye on the hourly chart, because here's the dip on the hourly, and note that currently it is 12:24 p.m. Eastern time. Okay. So, and we're very much over, pretty much over, overextend or underextended below the moving averages on the hourly. Doesn't mean we can't go lower. It's just that it's a Friday. So given that it's a Friday, what do you all know about Fridays? All right? The market might not be as likely to give us a clear picture on a Friday, right? So all we can do is trade to the bottom of the range and say, hey, maybe that's it for today. But again, this is to be determined. Obviously, with so much pressure to the downside, if the markets wanted to get this one and done, it can, but we'll have to see on this chart. And then I'm also monitoring whether there are any additional tariffs that are being imposed. I think the tariffs got delayed the past week, so we'll see what Trump responds. So again, let's go back to the long-term time frame. So let's go to the daily and go to 20 years for the S&P 500, putting things in perspective. So we talked about, this was what, 2008, right? We talked about this yesterday's video. Now, here's the deal, right? A lot of people are talking about yield curve inversions. Now, yield curve inversions are important because they can be a fairly accurate predictor of a recession, but that recession comes in 12 months to 20 months after. So again, you have to take that with perspective. It comes in later. So, markets can, this doesn't have to be the one and done, right? So, so you can see, here's the market top, and we eventually cave lower. But I just want to say, before this market top happened in 2018, look at these numbers of fake moves, right? We had a fake move here, but then only after a more dramatic in which the moving averages got all above us, found another drop, could not recover the moving averages, and that was pretty much it. So similarly, let's look at the 2000s. There's many attempts in which we hit it lower, but look how much we can rally after. So look how many fake drops were there. Let's actually go to the So this is the 2000 recession, right? But I want you to see how many drops there were and look at this extremely powerful rally, right? Again, another drop. Extremely powerful rally. If this is a recessionary type movement, we can expect something like this. And once we get a lot of this, especially near the peak, we're saying, oh my goodness, yield conversion. Hey, we don't really care about inversions anymore. This is what happens up here. We got to be careful then, right? There, in this point of time, not many people are talking about recessions. So again, that's just a more deeper dive and a follow-up from yesterday's analysis. Do you think we may have a recession? You? Yes, so we are inevitably going to have a recession, right? But first of all, let me just take a look at the 10-year minus the 2-year. Spread. So currently it is at 0.012. So I don't even think we've closed a day at inversion, okay? But we're close. And once the inversion occurs, then it's a predictor of, hey, you know, maybe the economy isn't doing so well. We certainly see growth slowing, but it's not negative by any means. But it says 0.012. So yeah, we will have a recession, but it doesn't mean that it's going to happen right now. Exactly. It's inevitable as to when. That's hard to judge. Correct. It's very hard to judge when that recession will occur. But I know for a fairly certain amount of time that a recession isn't going to occur when everyone's pounding the door on a recession. So all right, going back to TVIX, I think we might be above the moving averages again. So here's your moving average again. So we're back above. We'll have to monitor this. So yeah, let's just take a look. I think what's been happening is bulls are still trying to defend this level, which is you know, when we think about it, it's normal, right? We expect buying to occur at major support levels. So this is where we are right now. And I think we're all just awaiting what Trump will do in terms of retaliation. Now, if we speculate, which I don't really like to do, but if we speculate, if Trump does release the news or whatever additional tariffs imposed on China this afternoon, the market takes another dip. Could that be the low of the day? Potentially, but we'll see, right? That's a possibility. But okay. So here you go. This is the second go around for TVIX, right? We're above the 20-period moving average. So you'll have to see. Are we able to continuously close above it? If we're not, then perhaps this is losing momentum, right? Something I'm monitoring closely. Let's see if we can get anything on the hourly time frame for TVIX. Not so much. Pretty much the run-of-the-mill, you know, big move up. And if you were to ask me right now, Kevin, is this just a one and done deal? You know, are we not gonna go to, you know, maybe 23, possibly maybe a little bit higher, 24, to really spook people out? You know, it's not out of the question that we can't go to 24. Now, I'm not comparing TVIX this high, okay? This high doesn't have that much relevance to me because breaking this high, this is the same story essentially, okay? We're trading in a range. So this is the same story as this story. But these moves are different from each other, okay? These moves are different from each other. So we'll see if TVIX can go over $27. Does anyone have any other questions? Questions, concerns about the markets right now? I know personally what I'm doing back down here, okay, on the ES chart. Let's take a look at NQ for those who are curious. So NQ had a more significant move to the upside, and hence when we're dropping so significantly, it's taking back a lot of those moves as well. So again, we're going back to the bottom of the range. You can see it's trying to be defended by the bulls currently. Let me know if you want me to take a look at any of the charts. So for people who are interested about Roku, right? So this is what I talk about Roku. We've seen in the past few days for Roku, market's going down, but it doesn't really react to what the market does. That's some powerful stuff as well. So, you know, I can't say anything about Boeing and so on and so forth. All right. Anyone have any questions? All right, Boeing. Okay, so Boeing was doing quite well today. I was actually telling members, you know, Boeing rallied from 340 to 367 to 369, right? Obviously, we're not going to compare the low to the high exactly, but let's go back to the daily time frame. So Boeing has a nice move, but again, you know, we need market conditions to be well in order for stocks like Boeing to do well. You know, similarly, so I like Boeing. Boeing, you can see how strong a rally can occur after we hit, you know, a support level. So I can do these boxes once again. I say that this box from here to here is the bottom. I can just remove this. This is the bottom 10%. So if you can get a price of Boeing during that vicinity, that's a very strong sign. And then this is the top 10%. So we got close to it today. We actually didn't hit it exactly. We got close to it. And this is your upper end of the 10%. It's trading in a range. So if you have patience and you can see that price action, 376 is the top 10%. 314 or lower, 318 or lower. Actually, 322 or lower is the bottom, I'd say 10% of the move. All right, so we're seeing TVIX dropping a little bit. So we'll see how much this can drop over time. But obviously really elevated on the hourly time frame. Like I said, SPY is very much oversold on the hourly time frame as well. And I'm also a little bit doubtful that we'll get a clear picture as to which direction the market will pick by the end of the day. But this is to be determined. IWM. IWM has been weaker, certainly. So here's the IWM. You know, if one were to look at this, this can be a long bear flag pattern. If you were to look at this, right? So this is not a strong chart. This is below all the moving averages. This points to lower prices for the IWM. Financials. Financial, same story here. More of a bear flag, but almost a little bit like a downward wedge, a little bit. Again, we'll have to see how this plays out, but I don't really like these two candles. If it were a wedge, I'd like this to be closing in. So I'm not we can see certainly the 20 period acting as resistance for the XLF. All right, so I should take a look at the volume so far. Okay, so this is the SPY volume today, pretty high. Okay. All right. Well, I just wanted to come on, give a quick update. It looks like markets may start bouncing off the ES 150 period moving average. Once again, check out the stock talks if you haven't already, and I will talk to everyone very soon in probably the weekend stock talk. So be safe out there. Have a great day.